Okay, thanks for reminding me, Eric. I was about ready to move on without recording, so we'll kick it off. So I'm going to go ahead and share screen first. And another kind of a takeaway here, again, as we go right into the back trading, is a lot of times you want to just kind of close this baby down. Don't take too much of a peek, what direction it's going. So we're just creating that as real world condition as possible. So we've kind of gone into Meta, but we really want to kind of go back trade. We're going to look at around 7 May. So if you look down here on the bottom, this is a pretty cool little calendar. I click on this little icon. I can just pretty much go to whatever I want. So I click on 7 June. And this could be a random date. When you're actually back trading, you just kind of go random. But we're going to look at 7 June. We kind of want to look at, now I'm going to expand a little thing, expand on my daily chart. So we're going to look at a few things from here. So again, this is Meta. So I'm kind of scrolling out. I want to see left, what's going on in Metaville. This is significant, this gap, Meta back here, looks like that's approximately back in February, big gap down. So when we come down here with Meta, we kind of hit this bottom. And again, this is a daily chart. This is, still back in January, but some things start happening with Meta. And then we actually have a gap up. The fact that this gap up here, starts clearing the highs of this versus just being a retest and it could turn and continue to go lower. This is pretty bullish sentiment right there. So there were a lot of folks that considered Meta bullish down in this range, a gap up. That just is another very strong confluence that, hey, Meta looks like it did have a bottom back here in November. So overall Meta is very bullish. We get that pretty quick early this year, by watching it here. The gap up kind of confirms that because it cleared this resistance right in here. When this gapped up through that, it kind of retested a little bit. Very common to see these gaps filled, but only come down to about 50% of this gap, and then it reversed and went up. So again, that's very strong. And then once we're above this resistance right here, we're good to go. And I just got to share that because this gap is in play right now as we speak. And so this is very interesting. If people have been expecting this gap to be filled. When, we don't know, but the probability of it filling is very high, especially when we look at back as far as November, the direction of Meta. So that's kind of why Meta is an interesting stock to watch. And Meta is what? Facebook, so that's social media. It's very busy, being used a lot.
I've been watching it and seeing how it's been tanking too. So a lot of people have gotten out of it. I hate it.
And tanking mainly from, you talking like from the past leading up through like November of last year?
Just general, from what I've been hearing for like, Turley and that general area.
Okay. And you're right. You look at our social platforms, it is difficult to really understand the sentiment. There is a cultural shift going on, and so that sentiment is it is a very complex thing to consider. Is Facebook, Netflix, Twitter, the Elon factor. What's that doing to Twitter? I haven't really looked at a Twitter stock, but that is absolutely things we have to consider.
Right.
But what does the chart tell us? It may tell us something a little bit different.
Exactly.
Yeah, Facebook from last November has been bullish. So we trade what the chart's telling us. What does the market say is going on? All right, so I can kind of just bring my cursor over any candle right here, and if you look straight down, that looks like 16 June. So I really didn't get my cutoff there that I wanted. So I hit my replay button up here, and I'm gonna come over here. The 7 June is kind of the case study I want to look at. So, oh, that's May. Maybe I was in the right one. I'm sorry, Eric. Nope, that's it right there. All right, so this is the one I thought was a fascinating video by Jeremy Newsom, and it just tied so many things together. So everything we talked about thus far, Meta's moving up. We got this gap over here. But as day traders, how do we interpret, on the daily chart, this kind of information? So we got these high wicks. They indicate a lot of really selling pressure, within that session. There's some resistance there. The candle body itself closed just a little bit higher than it opened. It did try to, there's some bullish sentiment throughout the day, but it really got pushed down. It got rejected. So it's very extended. You look at it, gaps up here, a couple days bullish. Let me get rid of this right here. It comes down, consolidates horizontal. And then the fact that it didn't break down and go lower and really close this gap, but in fact went the other way, again, that brought in the bulls. The people bullish on Meta were in charge. They have been in charge really since last November. But this is significant here, these three candles.
Now, how do you cut that off at that point? So I pulled up the 7th on my trading view.
Okay, if you look up at the top of your toolbar, do you have a two little arrows pointing left and it says replay?
Yes.
All right, click on that once. And then it may even take a second time. When you bring your cursor down, do you get a big blue line with some scissors?
Yeah.
Yeah, put those scissors right there on approximately 6 June and then snip it.
I'm on 7th.
Okay, yeah, and then you can even come down to the bottom. You see this little jump to bottom part of your toolbar. You can click on that, and then you can just maybe tweak that big red candle on the 7th, so that then you have exactly what I'm looking at right here.
I'm trying to find those two, and I'm just not seeing.
It's 7 June. And are you on the daily chart?
Yeah, I'm on the daily. It's just not looking like
Here,
you're.
I'm going to stop share real quick, Eric. Let's share your screen, and we can actually, you can even push the buttons and the mouse and do our support and resistance, and that way you touch and feel and see and smell. You want to do that?
Okay. How do I do this here? How do I share this?
So I just clicked on multiple participants can share, so you should have the permissions, and then down on the bottom, do you have a share, little share icon? It's like share screen, a little green box with an up arrow.
There it is. Okay.
Or blue share bottom right with there you go.
Are you seeing it?
I am viewing Erik Steinman's screen.
There we
So
go.
that's it, Erik. These make sure I'm looking at your screen here. It says I'm viewing Erik Steinman's screen.
Yep, I am screen sharing. I got my scissors up, moving to the left and right here.
Yep.
So now we go, here's Tuesday the 6th, and then it cuts right to the 7th.
Okay. That's Wednesday, June 7th. Meta. Yeah, just click right there. Because you're in a 1 minute chart, and so things are going to look radically different. We need to be in the 1 day chart.
Okay, because this says 1 day, 1 minute. How do I toggle between that? I left click it.
I'm going to grab a little edit here. Go. Can you see this now? Okay, right up here, click on this drop down arrow. right up there.
Okay.
Okay, then just scroll down here. You got the daily chart
Oh,
right
there
there.
Okay, there we go. Okay, so we're right. Where I clipped it. Is that,
I think so. Got the little timestamp on there.
how do I get rid of this? These scissors?
You did, I think here, that's 16 June. So yeah, once you clip, the scissors should disappear automatically. So
Okay, there we go.
there you go. And we are looking at Meta daily chart. So let's just get over here to right in. We want to snip right in that area right there. Of course, that's this right here is a great exercise.
Yes.
So you can kind of just see that date where your cursor is. You're back in the 1 minute chart. I'm not sure why that defaulted back there. So go back up and select on the daily chart. Because here's the the kind of the challenging thing with TradingView, especially like 1 minute versus 1 day, it will take you back to the current date. But if you go to your date, and I believe you can actually then kind of drill down to like a 3 minute, fine tune where it is you want to back trade, and then we can kind of pick up from there. But that did jump back to the daily chart. So that's 22 May. This is exactly right here is snip right there. So
I go to jump.
yeah, click on that jump to, that should give you your scissors. And then right below that green arrow, just snip that. Yep, that's it. There we go. Now you can kind of drag that over, and we're going to kind of build from there.
How far?
Just kind of maybe put it somewhat right of center, because I want to kind of talk this a little bit. That's actually good right there if you wanted to kind of spread it out and look at it. But what I really wanted to kind of focus on here is that our daily chart is extremely, it's really one of our most important charts. You know, it helps us establish our plan of the day. You know, in our plan of the day, we're going to execute day trades on a 3 minute chart utilizing 10EMA. But what does overall market sentiment say? What do the futures say? You know, what is SPY? You know, we consider that. But when it comes to an individual stock within the bigger picture, we've got some perceived resistance kind of taking place here. We've got Meta has been running up since last November. It is slightly making new highs each day, but those wicks that we talked about, extremely bearish. It's having a hard time getting up. And these particular candles, shooting stars, a lot of people call them, it's kind of like an inverted hammer.
Mm-hmm.
So very indicative that the bears are just starting to overrun the bulls at this point here. So a very good plan is like, you know what, my sentiment in these conditions, understanding the role that these two candles, that one right there, that's what's causing me to think, hey, if in fact I break, I want to get a horizontal line here. If I break below these two candles, I'm drawing the other way. If my price on my 3-minute scale does have candles that start closing or breaking the previous day low for, this is June 6th and June 5th, then I'm looking for 10 EMA criteria to be met to go short on Meta.
Okay, one moment, my daughter wants something here. What's up?
I was gonna ask, can you help me with the Wi-Fi? Because it's saying that, I don't know, this one's not connected, but then are these ours too?
Yes.
Which one can I connect to?
No, that one should be connected.
It's not working.
Do the XT2.
This one?
Yeah.
What's the password?
Send it to you.
Oh, it's the same.
Same one for all of them. Yep. You're welcome. Okay. Wi-Fi issues.
Yeah, definitely understand. Daughter looked like an angel, descending out of the clouds. It was awesome. I love your background. That's pretty cool. All right, so this is the takeaway from this screen right here, Eric. And what I want to kind of highlight is we're utilizing a daily chart. We if you've got the candlestick PDF available in your real life trading dashboard. Some of this type of candles are explained in there, and these really do create a bias, for us to then come up with a trading plan or a strategy to consider. Hey, I think Meta's ready to kind of go short. It's ready to pull back for a potentially small move, a 10 EMA move. That's something we can identify by understanding the candlestick patterns being presented here,
Right.
and the direction Meta has been going for so long. And that's really the takeaway here. So it's like, am I really bullish on Meta right now, or short if in fact it closes below the low of those two shooting star candles? The probability of me having a winning trade if I go short is very high. It's very positive. So that's kind of the condition I'm looking for, utilizing previous day candle analysis and the overall stock, and that's the plan. And so that's the background of this story.
Okay.
And that's part of any stock you're analyzing. You got your 5 or 6. You really start here, and say, hey, what are my last few days telling me? And are there some biases a certain way? And then we kind of, now from here, we'll zoom into our 3-minute. There's a couple things you can do here, Eric. I apologize. Is you now have, if you move your cursor over, both of these candles, that one there and that one there, then look at this area right here, because when you put your cursor over that candle, it'll actually give you the high and the low of that candle. You can start plotting your previous day high and previous day lows, or this area right here of significant interest, this low of these 2 days. You can plot that from this chart. You can also do it in your 3-minute chart. It's however you want to do it, but utilizing your trending tool over here, and you drop a horizontal line, what the high of that particular candle is, or the low, and then that way you can start plotting your highs and lows of those previous day candles. But we know our area of interest is to break below these 2 candles. That's a condition that we want to be met.
All right. Yeah. Now on the video, it was kind of confusing to me because it was going down.
Yep. And okay, great question. It was going down because, again, it kind of goes back to our plan. We understand that these high wicks indicate a lot of selling pressure during these sessions. You know, we've got some smooth bottoms right here, so there is some support that's also available here. But these two shooting star candles, if in fact we have price action that, I'm trying to use these arrows here because I think they're pretty cool. Again, because these two candles say, hey, we're actually expecting it to kind of break and go short based on these two candles. Even this third one here is a kind of an indecision candle. No candle closed above that. And even these two candles closed, you know, it looks like maybe just slightly above where this red candle is right here. Oops, we're kind of using that candle as a little bit of analysis. And, you know, so you look at the body of the top part of the body of these two candles. It looks like it's pretty darn close to the bottom of this red candle. Again, so this is an area of extreme interest for us right now. And our bias is with these high wicks, inverted hammers, shooting stars, whatever you want to call them. We actually believe that if we do get a break below these two candles, that it's going to continue down further. So that's when we go into the 3 minute, after we've kind of plotted this area of interest, and then we consider our 10 EMA. And if in fact we get candles that close below this area right here, we now, our conditions are met to go short. And another reason I really enjoy this video is because this is just a good case study. Hey, when Jeremy Newsom did it, this was over a few day period. He was watching Meta, and then when this candle come in, he planned on, if it broke below that, he was going to get in. It did not. So he waited another day. The third day it did, and it was just a great successful trade that incorporated all the things that we've covered thus far in the course. Okay, so any questions on this? Because this is really important. This is your start of day pre-session. What does my favorite few stocks look like? And here's an opportunity that's kind of screaming out loud at us.
Now I got the enter short and enter long here on this thing. Would that pertain to anything we're looking at right now?
Not yet, because this is our daily chart. And so we want to now go into the 3 minute chart, because now we have a plan, and our plan is to plot that the lows of that June 5 and June 6. And if our 3 minute chart breaks that support from those two candles, then we're going to be looking at getting into a 10 EMA.
Now there's a 3 minute. Looks totally different.
It does. Let's see your date. That's 2:15. So grab your scissors again. And so we're kind of seeing what's happening here. We definitely, so that's June 6th, 7 p.m. So is that like post market? You're looking at regular trading hours. I got to convert our time zones. That's June 6th. So let's just stay right there. And if you look at, you can see, can you see this little eraser on your screen?
No,
You don't see. Okay. How about now? Do you see my mouse?
no.
Okay. Well, let's. All right. Down here in this area, all you got to do is either, if you put your cursor over this button, you'll see that it says shift and a right arrow key. You can just toggle one candle at a time. Oh, down a little bit further. Keep coming down. This right. Put your mouse over. There you go. See how it says shift plus the right arrow key? So now you can start navigating one candle at a time from here. And that's key to back trading.
Okay.
Okay, let's just do one at a time and let's talk about it. before we go. So what is time frame here? If you put your cursor right over this,
I got it on, I put it on 3 minute.
I'm just trying to find my pencil here, don't it? All right. If your cursor is right here, what is our time right there? Actually, just this whole area. Yeah. Okay, 1336. I'm trying to convert your time. What time zone is this for you? Is this actually like Eastern Standard Time, 1330? I believe it is. So that means we need to get over to here is where we actually wanted the start of the session on this 3-minute chart.
So that would be the first one. There's the 6th. And it's the first one on the 7th.
Okay, so it says I'm seeing like 1957, so it looks like you might still be in like universal time or whatever. So that kind of threw me for a loop. That's fine.
But on the bottom, I might clear it up. On the bottom, it's starting at 1330.
Yeah,
I don't
so
know.
if you come over here, this little 1, 2, 3, this pentagon symbol to the bottom right of your corner, bottom right. I don't know what you're seeing right there. There's a little pentagon, like a stop sign on the.
Oh, okay.
Yeah, click on that, and then you've got some options here. So the reason I want to take us in there is just I believe that's the one. It's either going to be here or we're just going to right click on the screen, click on the session, but you do have an option to set the time to
regular.
Yeah, okay. So click on your screen here instead. I'm sorry, just right click, and then let's do settings at the bottom. Click. Okay, time zone at the very bottom where it says UTC.
There we go.
Yeah, let's change that to probably your time zone. It'd be the most logical.
So Chicago is the same time as mine, or do I find?
Nope, that sounds good. It sounds like you're is that Eastern or Central? I guess
Central time. Yeah.
Okay. All right. So this is going to make things a little easier for us to speak the same language. So you can hit OK there, and now put your cursor back over on these candles. So now 8:30 Central time. There we go. So that, because that is actually 8:30 Central is market open.
Correct.
Okay. All right. So grab your screen and just kind of drag things over to the right a little bit. We want to see everything on the 6th in particular, and possibly even the 7th.
Okay.
Okay. And you might even scroll like over here where your prices are on the right side and just kind of scroll down a little bit, I want to bring in about 2 days worth of candles. Do you have a little ball or, oh, there you go. There we go. Continue to do that for about, so we got 2 days worth of 3-minute. There you go, Eric. Perfect.
Got it.
All right. So, and the reason we wanted to kind of navigate TradingView this way, and again, there's a lot of different ways to navigate it, but remember our plan is we've got 2 rainmakers or the shooting star candles. We've got some visible support, but with those high wicks, on the daily charts. And our plan is, if in fact the stock price breaks below those 2 shooting star candles, hey, we think we've got nominal conditions to enter a short trade. So we're combining 10 EMA with a break in support. And we're also going to see the direction of our moving average. And that's really what I wanted you to kind of, because if you can see how all those three come together in this scenario, then the world should open up to you from here on. To again, start at the daily chart, work yourself down to the 3-minute chart and understand, hey, what was the previous day's high, previous day's low, and what is the sentiment of the the stock price. You know, you do have a natural bias when you enter a trade. You create a plan from that bias. If your conditions aren't met, then don't enter the trade. You know, when you get other things to give you all the conditions you need to maybe go the other direction, you can definitely enter the trade. But again, now you've changed your plan, which is fine, but you're not compromising your rules. So if it does shoot up and goes the other way and breaks the high of those shooting star candles, hey, our plan does change. But we just don't expect that in this scenario.
Okay.
Okay, so we're looking at the 3-minute chart. So what is real important here is we want to go ahead and now plot some support and resistance. I want to grab, I want to probably drop a good support and resistance, you know, along this area here. You know, we can, and again, price, support and resistance are areas. There is no defined price on them. But if you was to grab exactly where your cursor is there, trend line tools, horizontal is, that horizontal line is a very common use. You can just pretty much drop that on your screen anywhere and then drag it, you know, to give you that visual indicator of support and or resistance. What I'd be kind of looking for here is, I've got quite a few, but I'm real interested in this area right in there, this third line, and I'll delete these 3 green lines in a minute, but to me that's very significant because this is our low of 6 June. This is our low of 5 June. If our I need a pencil. If our price, you know, it opens up here, it could go that way, or it could come back down and come through here. Once it breaks through this support, now I'm looking for a good bull candle closing below the 10 EMA and to go short. Because this area right here is in fact that support that was very visible on the daily chart for Meta on 5 June and 6 June. So again, here's a perfect example of why when we say over and over, plot your support and resistance. These are key areas in all your planning. Okay.
Yep.
Okay, so I've cleared up my stuff here. I like the draw works really good. Okay, so we've plotted that right there. We've got a good support area, but this becomes really a target area as we back trade. So you can now grab your screen here and just kind of drag it this way. And we're going to start using that forward option. And we're going to start just kind of looking at the channels. Before we start further here, Eric, I want to kind of have you bring up a VWAP indicator. And that's that volume weighted average price, because it's just a great time to see the price relative to the VWAP. Because again, that's very important to understand, hey, what is the sentiment of the volume. If we in fact are closing, all our candles are closing below that VWAP, then we know that, hey, we in fact are in a trend in that direction. If it's below the VWAP, hey, it's a downtrend. If they're staying above the VWAP, we're going to be bullish in our trade entry. So under your indicators, up here, let's see here, draw indicators up here. Let's go find a good VWAP so we can add it to your list of stuff that you've got on the top left over here. Okay, you got SMA, perfect. Type in just VWAP and see what comes up.
VWA.
Yep, and that volume weighted average price. Let's click on that one right there. And okay, so there might be a limit of how many indicators you can have right now, which is the case. So let's maybe X out on the you've got this 200 day. Maybe we just kind of want to prioritize probably that VWAP in there right now. So you might close out that, remove that star there, and then you should be able to add a VWAP following that.
Okay, now anyone of these other ones should maybe get rid of?
You can absolutely. Yes, yeah, go ahead and delete them and open them up, because we'll build over the next few sessions, some of the indicators you want. One of the things I'll kind of throw out there is this trading view is your workhorse. You've got an ability to make a lot of money by utilizing trading view. You don't enter your trades necessarily in trading view. You can, but we don't really teach that way. But as far as any tools that you probably want to invest in your new craft of trading, trading view, 1R is going to surpass the cost of trading view. So I'm just saying, I might recommend probably, if anything you invest in, probably be like the premium or pro within trading view.
I got the pro, but
okay,
it's not letting me add this for some reason. And I only got 4 on here, but it's not letting me add.
Your E up here, Eric, your top left, that E. Let's just take a look at your account real quick, if you don't mind. Yeah, because you should be able to put quite a bit. So you got the annual pro. Data subscriptions, sure enough. 385. So let's look at what's included, because it'll tell us exactly what our limitations are. If you scroll back up, right. Okay, where'd we go here? Yeah, what's included right here? Let's just take a quick peek at. You got the current plan, annual poll 385. This area right here.
Oh, here we go.
Okay, so
Well, I got 5 indicators per chart. All this stuff.
okay, so that's the reason we're limiting that there. So this one over here, if you can scroll down just a little bit, what's this one called? This the premium. So you got the pro, you got the pro plus, and then the premium. So you can kind of see the difference between the pro, which is 5 indicators per chart. You know what? I think we're good. Let's just create us a new chart. I'm going to kind of show you a little cool trick that you can save, because I believe it's not 5 indicators total, but per chart. So back out of here, go to your okay, you're there. This area, you can close these out, and we're going to add whatever indicators we want, and then we're going to come back up here to the top, and we're going to save them, because we're just going to go ahead and create a template here that allows you to have, you don't even need 5 indicators per chart, but I believe you can have more than 5 indicators in your favorites, but it's that per charts is limitation. Does that make sense what I'm saying?
Yeah, but how do we do this?
Yeah, let's if you X out of this, come up. Yeah, X out of that. Now come over here and go ahead and close these. Yeah, by hitting these little X's that are there when you expand them. There should be a little X. My green.
Oh, there it is.
Yeah, I'm covering it up for you. That doesn't help, does it?
That's why. Okay, gotcha.
All right, now let's add the ones that we really want to focus on. So VWAP is in there, and 10EMA is in there. And then you could go ahead and do your simple moving averages, or let's go ahead and do EMAs. So just type in moving average, and then we'll scroll down to exponential moving average. Okay, third one down, moving average exponential. Highlight that star. Okay, that's pretty cool now. So we've got some indicators here we can work with. So let's close out of that. Next thing we can do is, if you come up back up to your toolbar, you can click on this little this clover leaf looking thing. And then now do a save. There you go. Now just call this simple, just call maybe your VWAP. And so, yep, you can hit save. So now you've got less than 5. I'm trying to see where it should have saved it up here in your toolbar. Do you have a little round circle that says, okay, click on that. Yeah,
No.
So it is saved. Yeah, anytime you want to just go back with these indicators, just go up to this 4-leaf clover, drop down, and this VWAP's going to.
There we go. I just saw it. I starred the template here. And that put it up.
Beautiful. Yeah, so now you won't have to go back and search for VWAP again. And this particular, that little circle, whatever instrument you're in, you just click on that V, and it's basically going to bring up these indicators on that instrument.
Okay.
So you can definitely tweak it the way you want with the 2 or 3 indicators that you want, and save it just as we did. And you can quickly, create that output that you want. Perfect. So Pro is absolutely fine. There are ways to make it efficient, to use it. Okay, so that's significant. Now let's just kind of review where we are. We understand the daily sentiment. We're biased towards going short on Meta. We have plotted our previous day's low, and actually we were interested in both Monday and Tuesday, because both of those candles were identical on the daily chart.
Right.
Okay, so that area of really 267.64 is interesting to us. So now you can kind of look at, you hit that forward button and kind of walk through a couple candles, because what we do have is you got your whatever time frame that is right there. So you can just kind of hit that shift and right arrow key, and we can just kind of look at one candle at a time. And we'll kind of see what happens here, because again, our bias is short, but it looks fairly bullish at the beginning of the day. You see how it kind of comes up,
right?
It kind of tests down here, this red candle. Well, red candle right in here, you know, kind of makes me think, hey, if I'm really bullish on Meta, I be tempted to go long in this area above this red candle and go 10 EMA. My reason for not under these conditions is, again, here is the previous day's high yesterday. You know, there's not a lot of risk reward space there, but again, what is our plan today? We've had 3 days in a row where Meta has not really went up and had the body of their candles closing higher. There is resistance here. Our plan is actually, we believe we're going to go down. We're going to go short. So all that's happening right now is it's bullish at the start. It's coming up. This is a little S curve. Hit your forward right arrow, shift right arrow, and let's continue to play this out. Okay, what's our next candle there? Okay, that gives us some bullish sentiment. Okay, still the body of the candle is above our 10 EMA. We're breaking through the VWAP. This wick right here, you know, it's still kind of bouncing down, you know, from, I think, is this your 20 EMA?
Not sure what that is.
Or I'm sorry, your 20 SMA maybe. Yeah, you can hit this little settings on that particular one there. Let's go ahead and make a 10 EMA out of that. There you go. Hit that little sprocket and just change that length right to 10 up here at the top.
Length.
Yep. Yep. Make that 10. And then here's a quick little trick. If you go to defaults on the left and then do a save as default. And so now you actually have your 10 EMA as the default for this particular indicator.
Because we had
no 9 EMA.
Because we had a 10 EMA right above that one.
So we got basically two of the same thing. It's grayed out for me. I'm not seeing it on this end. So
Right. Yeah, so
oh, that's
yeah,
and that makes sense, Eric, because you look at, if we look at these two lines right here, there are two there. We can actually delete one of those.
I just get rid of the MA9 close 0 SMA 5. Don't even know what that's. Yeah.
Yep. And this is the one that I was thinking we were making the adjustment there, but we want to convert that 9 EMA into your 10 EMA.
Yeah, so we got the 10 EMA now. Let me adjust that.
You can make it whatever color you want, blue or red.
How can I make it thicker? Here we go.
There you go. Yeah.
Okay. All right.
All right. Let's do one more thing, Eric. Go to your VWAP. I just want to look at your settings on that one there also. And let's just have at least a basis for what we're looking at. So inputs. Yep. Okay, there you go. And then session, correct. Source, high, low, that's correct. That's good. That I just wanted to confirm that we did have the session checked on there. So that's good. All right, so let's just continue scrolling through the next candle. Okay, this is where it starts getting interesting to me. Is again, we believe, you know, that we're kind of looking at a short of the day, but this right here now, you know, this area along with this area, you know, let's see if we're going to get higher highs or are we going to get lower lows. But again, at the beginning, the first hour of that market, you do have a lot of volatility. but let's kind of keep our eyes on this area here, because we did have a wick kind of come down here, but we did have another bullish candle right in here. But let's just continue scrolling through the candles and see if our plan is going to play out with what we expect today. Okay, that's very bearish candle, is it not?
Yep.
Okay, so now we're thinking, okay, it's doing something we expected, but we have not met any of our conditions yet. We do have a ways to go before we start kind of running into this. You know, do we have candles breach the previous day's Tuesday and Monday's lows? That's kind of what we're looking for. So let's go to the next candle. Okay, this is actually really nice. And this is advanced stuff right here, Eric, because right here you do have 10 EMA bull candle closing below the 10 EMA. Okay, you have conditions met to actually enter a trade right here. And there's a lot of people that wouldn't even hesitate to get in there. It's a very good trade. It is aligning up with our plan. We have a natural bias, you know, towards going short. But one of the things I kind of wanted to highlight was, even though we've got 10 EMA, but we really haven't breached the previous day's low, and actually 2 days previous, and they happen to be just within really $1 and some change of one another.
Right.
And this is the takeaway from like Jeremy Newsom is, hey, looking at the daily chart, 2 shooting star candles, if and only if it breaks below those 2 candles, is he then going to go short on Meta? Because we are entering a counter trend. We're counter to the bullish trend, the uptrend of Meta. But we have those 3 consecutive days that are very indicative that, hey, it's hit a high and it's going to rest. It's going to pull back for a little bit. We want to exploit that. When we get that type of sentiment on the daily chart, those are the kind of trades that we really want to go after, because that is going to increase our win ratio over our win-loss ratio. That's really what I wanted to make sure you're kind of grasping. So you could enter there. Conditions are met. That's a 10 EMA entry. However, for this scenario, we do want to breach the previous day's low, the Monday and Tuesday. So let's continue on down to see if in fact we do breach the previous day's low. We don't want to have another day where it comes down to that support and then bounces back up and then it wicks up, because then we could easily lose on it. We don't know that yet. Meta is actually bullish overall. Okay, 10 EMA is now showing us that it is resistance. These candles are closing below the 10 EMA. The blue line, that volume weighted average price, our candles are below that. That's another very strong indicator that, in fact, today's trend is in line with what we expected, and it's trending down. So when I say VWAP, that's this way, right? That's your blue line right here.
Right, the narrow blue.
Yep, that's narrow blue. So we've got a lot of things telling us that, hey, this in fact is probably going to go short today. You've got this high here. Remember when I talked about it? This is an area of interest here, because when this bull candle here came in, you know, was it going to bounce up and breach the high of the day here, or was it going to roll back over? Okay, in fact, it is rolling back over. And then when that rolls over, we start looking at, now, where is my price going to start supporting, below VWAP or above VWAP? Is my price going to start staying below my 10 EMA or above it? And what direction is my 10 EMA relative to my VWAP? My 10 EMA is below the VWAP, and they're both pointing down.
Yep.
So we have a lot of bearish indicators. Okay, so continue rolling through, because again, we want to we want to see the breach of
There we go.
these areas of these area right in here.
There it is.
Okay, excellent. Okay, let's hold up here. Because I just have a hard time seeing my screen here. I'm going to bring mine over because I want to be able to kind of look at it here. Because I want us to look left a little bit. That's kind of what I'm getting at here. Where's mine?
I brought it over a couple days.
Okay, there we go. All right, so that's that we always look left. We always kind of look left. We did plot that line at 269.67, which is very good. It lets us kind of know where we are. And relative to the previous day's lows at 269, see, we got 269.67. Yeah, so this we're right here. Now, what we're interested in is we've got this. I see, you can't really see my line here. We've got, here's our kind of 10 EMA candle we're kind of interested in. You see this one right here? It wicks down there. So now we're going to kind of incorporate 10 EMA here once this was breached. So now you got your, let's put your long or short tool, because this is now another reason I really like this exercise, Eric, is because we're also going to, you remember when I talked about the 3 things to kind of write down? You know, if you're going to go through support or through resistance, you kind of want a candle to close below. In other words, you have your breakout. That's one. Number 2, you let for it to retest or pull back, consolidate. Number 2, and then number 3 is we go ahead and enter the trade. You know, once it's kind of retested, it's confirmed that, hey, that's not a false breakout through that previous day's low. And again, that's just a way, but what I am discovering is I have a lot less fake breakouts and the trend going the opposite direction if I exercise that patience and I wait for that support and that resistance to be broke. And then I'll enter like a sell limit or a buy limit and wait for the price to come back up to my actual 10 EMA where I wanted to enter. And then I've also increased my reward, you know, from doing that. So we don't chase stocks. Okay, so we've got, I'm going to see here. I want to, sorry, Eric, I'm looking at some. I want to make sure I'm walking us through the right candle here. This is, so you can't see my mouse. Okay, this area right here is significant. I think I told you this candle here was 10 EMA. Could have entered earlier. We wanted this price range here to be broken. So now that condition 1 was met. Let's roll through a couple more candles and see what happens here. Okay, hold on. Once it's been met, look at this beautiful little retest that comes up right here. Okay, that's what we were looking for. So we breached this. So if in fact we come back down through here, we want to be triggered into the trade at this point. Here, I'm sorry. Eric, I'm confusing the heck out of you. I apologize. Here was our goal. Is this was breached right here. Here was kind of our 10 EMA candle. Once this was breached, I wanted to do a sell limit order right in here to go short. So once this breached right here, here's the price that I want to enter the stock right here. So I use this long short tool. I want to enter right below this green candle. These green candles, they actually come up and trigger your sell limit. You're in the trade up here, and then we wait for it to roll over. And then I want to have you kind of talk me through what I just said right there here in a minute, because that really ties it all together.
Where would I put the middle part then? Is this
You're going
bigger or?
this circle, yeah, just kind of drag the whole, there you go. This area right here, you want to put that essentially right, because this is your price that you want to get in at right here. So drag this up to here. There you go. Because again, here's the 10 EMA that we're after. But once we breached the previous day's low, we waited for a retest to come back up to this area, and then we're going to ride the trade down. Did that make sense?
Kind of.
Yeah, and
Going opposite directions. So
yeah. And again, this is study this video, and this is complicated, but I really believe this is valuable, because if we can get you to understand the 4 or 5 things that we've actually kind of covered through different sessions, if you understand each one of those, how they work together, you are going to be dangerous in a good way. In a good way. So sell limit. Your price right here, because this is where you want to enter here, but you wanted it to breach the previous day's low. Price is down here. You go into your broker, you enter 176 shares of Meta with a target of 1.2. So drag that down to where you've got like a risk reward of like 1.2. Just kind of drag that down right here. Keep going, keep going. 0.82, 0.86. Okay. And then you can even actually, where's a good stop up here? You know, you probably drag this down a little bit, and that does reduce your risk to reward. So drag this down just a little bit. I'd probably look for good stop up in that area. Fairly conservative, but look at my 10 EMA. It's pointed way down. Look at my VWAP. You know, that average price is really going down. So fairly conservative on my stop. So like right up in here. And then you look at your risk to reward is 1.35. So once you breached this previous day's low, you went into your broker and you entered a trade right at 270.40, a sell limit. You waited for that price to come up, hit that trigger on a sell limit. Now you're in the trade. I'm just trying to clear this up right here a little bit. Okay, so our conditions, again, it goes back to that day. We had a plan. We believe Meta is going to go short. We didn't go short on the first 10 EMA bull candle closing below the 10 EMA. We waited for that previous day support to be breached. And then we waited for that price to come back up to a higher level because we're shorting. We want to borrow from the broker at a higher price and we want to sell it at a lower price, and we're going to pocket the difference. Boom. And you just hit a 1.35 target right there. All right. So why this is a great case study, Eric, is 10EMA. I think you've got that, meaning you understand that, hey, you're really looking at a bear candle that wicks into, but yet closes below the 10EMA. That's minimum criteria met for you to go short. You also fully understand that to go long, if you have a bear or red candle closing above, the 10EMA, and we look for it to like at least wick in, be pretty close. We don't want a lot of space between that bear candle and the wick and the 10EMA, because that's what we would call extended, but it kind of wicks into it. You could enter a trade above that red candle to go long, and when the price comes up, hits that trigger, you now enter the trade you're going to go long. Okay, that is foundational for the strategy we teach in RYD. You have that. Any questions on that?
Probably a million.
Okay. And again, once we will spend a lot of time on TradingView today. And that's, spend time becoming very intimate with TradingView and being able to plot that support and resistance. But if you remember back on day one, your initial assessment with Jeremy Ritz, he took you at the SPY and a couple stocks, and you looked at the day chart, and he plotted some support and resistance. Say, hey, we buy low, we sell high, and if the market's going the other direction, we borrow shares from our broker high and we sell low. And so that's what we did today, is we analyzed the daily chart on Meta. And because we know more today about candle sentiment, that's why I wanted to tie this in, is we understood, hey, those high wick, inverse hammer, shooting star candles on the daily chart, those are very strong candles to consider going short, following those. It's just like a bear candle that has a large wick going down, but a body on the top third, especially if it's like shaved at the top, that's a particular candle that gives us a lot of bullish sentiment. A lot of times we can enter above just a hammer candle, and the momentum itself is going to provide us a probability of a successful trade. That's all we're doing there. We're utilizing the overall larger time frame to help give us a strategy and a plan at a smaller time frame of what direction that stock price is going to go. And on this particular trade here, 2 days back to back shooting star candles, very strong sentiment that if in fact it was to break below those two candles, you have an excellent probability of having a very successful trade that day. Those are the kind of trades we're looking for. So here we combine 10EMA with previous days support and resistance. And then we took it another level. We utilized the sell limit capability. So we were able to still enter this trade at a higher price than at the actual previous day's low. Because again, if we're shorting, we want to borrow those trades at a higher price and sell them lower. So we implemented a kind of another advanced strategy, not just a buy stop and wait for it to go down, but we're like, hey, I'm going to wait for it to retest, come back up and consolidate. And so we borrowed those shares at a higher price. And then your 1.35 target was a lot easier to achieve right there. If we would have bought at 269.84, we would have had to go down quite a ways to actually get that target. So again, just a great visual to see why that sell limit is very valuable. Because again, if price is already, lower than what you want to buy, you use the sell limit, wait for it to come back up, trigger your entry, and then you just go back down to where you were. You've already got probably a 0.5 R. Okay, and then the opposite, if we're long, our price shoots up past or above a bear red candle, or through some through some resistance, and then a candle closes above that, we just wait for it to come back down to that area, retest, consolidate. But that's also where we want to buy low. So we're not going to chase that stock. You know, it shoots up through our resistance. Oh, I want to get in there. No, it'll more times than not, it's going to come back down, you know, to that, because that what was resistance before is most likely going to become support going forward.
Right.
You know, and so that was another thing that we kind of demonstrated through this exercise. So any questions on that? Hard for us to like go back and forth to utilize the pen, the eraser, but I think we actually did get all the information out there. And if you understand those 4 things that I just went through hastily, you're really are empowered in a huge way, because you start just repeating that through your own practice.
Right. And that's what I just need is time. I haven't had any time working on this crazy house, and we're just about wrapping this thing up. I need to spend a little bit more time tomorrow and Wednesday before our session, and just start moving along with this thing. It's just time. And it just bugs me that I haven't had enough time to mess with it, you know.
And I get that. And here's my challenge to you is don't worry too much about, you know, looking at a whole bunch of different stocks and, you know, different trades. I would say between now and Wednesday, if you could reproduce this trade multiple times, you know, go back to the daily chart, do a little research, go to that real life trading dashboard, look at that candle stick PDF that's on there, or just even Google it. Understand those shooting star candles and the sentiment that they actually tell us. Understand, hey, if in fact the following day, if I break below those, you know, hey, that's a very strong bias that it's going to continue to go lower. And back trade this. Some people say 100 times, but back trade this same one over and over. You know, add your 50 EMA in there, your 100 EMA. Look at the direction of those moving averages. You know, you got the VWAP on there. That's probably one of, between a 10 EMA and a VWAP, probably really are some of the 2 most important ones you're going to have. But put in your other EMAs and understand which ones are applicable, which ones are not. You got your VWAP, but trade this over and over. Listen to that video and see if it doesn't come alive to you, because I believe if you understand what Jeremy Newsom is talking about in that video and what we actually did go through here, you're going to be golden, Eric. And you don't have to worry about, you know, going through all the analysis on all these other stocks. But if you could really understand everything that we covered here in the past hour and 15 minutes, I really am comfortable that you're going to have some light bulb moments really come off real quick.
Yeah, it's just spending time, and you know, I'm sure that's going to happen because, you know, like I said, it's just time. It's just getting in here and doing it, and haven't had the time is just bugging the heck out of me. And because this is really what I want to do.
Yeah, that's good. So I think here's just a great case study for you. This is what you really want to do. Don't look past that video and what we covered here. Highly encourage you to chew on this until you fully understand it, because this covers everything that we've covered thus far. You know, and yet it's kind of advanced. This is where I really want to get people by the end of, you know, 8 or 9 sessions. You know, we really haven't done too much on the sell limit. We've taught it. We went over it. We said, hey, here's its purpose. But this particular trade and this video just really demonstrates why we do the daily chart analysis. You know, understand candle sentiment on that scale and previous day lows, you know, and previous days highs, but previous days lows in this particular case study. Back trade this over and over. If you got questions on this, they'll be specific. I'll answer them. But if you really do understand that video and what we went through today, I am very optimistic that you just redeemed a lot of time, you know, in your new niche.
All right. Yeah, I think that's going to be more than my brain can handle for today, but I'm going to work on
I agree.
this
I agree.
on Wednesday and see what I can get in here.
All right. Yeah, sounds good. But yeah, just focus on this right here. This ties it all together. And I'm very optimistic that if you just chew on this, and when you have those light bulb moments go off, we're really going to take it to the next level. There's a lot of stuff in this video.
All right.
When I say the video, I'm also talking about Jeremy Newsom in that original email that I shared with you guys.
Right.
That's
I'll be
video
going
I'm
over
talking
that. Yeah, I'll be going over that as well, and kind of going back and forth between that and trying to really get it to go off here. So perfect.
Yep. All right, Eric.
All right.
Happy Father's Day to you yesterday.
Appreciate it. You too.
All right. And I will talk to you on Wednesday.
Great. Thanks a lot. Appreciate it.
You got it, Eric. Bye.